SMT Nation, we are back. Nation, yesterday, well, actually, I should probably indicate this first. At the time of this recording, it's October 23rd. And just yesterday, Verizon reported their Q3 2024 earnings. And most of the metrics were really, really good in terms of how the company performed. Like, all the different numbers, the consumer numbers, business numbers, broadband numbers, everything was really good. The churn was a little high, so that was a little negative. But that's not the type of thing that makes the stock go down 5%, right? To see that kind of dip, which, by the way, not financial advice in this video. We're just using it as a baseline response as to what exactly happened in the stock market. But as I was listening to the Q&A session, and I sat through that entire hour and a half earnings conference, there were a few things that I think caused this, if we could say there was a cause. So the first thing, it looks like CapEx is going to be coming up a little bit higher than expected, at least what the shareholder expected. Verizon is tracking to go $17.5 to $18.5 billion next year. I think what investors were thinking was eventually that was going to be coming down and relaxing closer to $17 billion and then flattening out, right? So having that little spike back up to 17.5, 18.5 range, I think maybe kind of spooked them a little bit, right? They're expecting it to relax a little bit more, maybe stay at like 17 billion. So I think that's part of it. One of the things that was indicated was when Verizon got down to 2.25x leverage, talking about the debt ratio, they were going to start doing share buybacks, which they're not that far away. They're like, I think they're at 2.5x right now. So they want to get down to 2.25, then they'll start doing the share buybacks. Verizon has been increasing the dividend payments every single year. So, some of those things are actually really good for a shareholder. And then you look at some of the metrics. Fixed wireless access growth looks really good. But, they're indicating that they're guiding up. They're going to go from 4.2 million today to 8 million in the next, handful of years. And there's some fear that growth vector, that revenue gainer, might be kind of slowing down in pace. So I think maybe that has something to do with it, but I think it's more of like a reach. But I think what the investor sees and notices is that because that additional extra spend, that kind of reduces the potential free cash flows, right? And then throw in the additional questions that came in from one of the investors. He asked about, phone upgrade rates are very, very slow, like 10.2% down. Like they're nobody's buying the iPhone. And then he spoke to the tax regime. He spoke to the tax rates. And of course, this gets into the political, like who wins the election. The Frontier is not free cash flow positive. They were talking about the Frontier deal, right? Capital expenditures being a little bit higher. The investor has concerns, right? And Frontier is not going to be a cash generator right away. And then they went on to ask about dedicated fixed wireless building, right? And then Hans reiterated, they're building once, they're building a single network, and then they're going to monetize it on the edges and sell what people want, which I totally understand and I get. So I didn't really take any umbrance to this. They're having a lot of success in fixed wireless. So I'm trying to find what caused the stock to dip 5%. And that's really the only thing I had, because that was really the only thing that at any point during the conference call caused any moments of contention. And that was it. So I think that's what may have caused it. I think some of those elements, I could be wrong. You guys can comment and tell me what you think it may have been. Maybe it was one of the financials. I know that the EPS was much lower than the street expected. Maybe that was part of the calculus, but it does appear to be that type of component that caused the investor to maybe be spooked. But I will tell you guys that in the past, when Verizon stock has dipped after an earnings call, we have seen the stock rebound pretty quickly, which some investors may view as a dip that may be worth buying, right? So down 5% after that. The earnings, Verizon, specifically Hans, the CEO, mentioned, CapEx will come up when the opportunities arise. And I think that's the right way to view the business, always investing in the core business, making it better. I don't think you could lose. but maybe it was enough to spook the investor. Do you guys think it was? Is it deserved? Is it warranted? What are your concerns? I mean, the numbers look pretty good, but maybe there's something I missed or I didn't consider. Maybe there's something that the investor identified. Maybe you guys can comment down below. Was it something on the financial side? Was it something else? Sound off in the comment section below. You're the voice of the people, the SMT Nation. Let your voice be heard.